everyone. We're at NAI 500 at the PDAC, one of the largest mining convention in the world. So sitting beside me is the legendary Mr. Rick Ru. So how are you, Rick, today?
Life is good, thank you.
That is good, good. So let's start off by asking you the really timely question, the coronavirus. How it's been affecting the market, and what do you think it will affect the market overall? Does the precious metal investors should jump into the gold right now? What's your thoughts on that?
There were many questions rolled into one.
Yeah.
I think the impact of the coronavirus is twofold. The first is that the virus itself, I think, was a trigger that caused people to express nervousness that they already felt about financial markets. But it's also a very real risk, particularly in the natural resource business. We talked before the camera about the fact that China by itself represents about 35% of the marginal demand for natural resources worldwide. When the Chinese economy slows down, the resource market as a whole gets pneumonia. With regards to the gold part of the question, I think you need to segregate between gold and gold stocks.
Yeah.
If you look back at a history of other recent financial panics, an example would be 2008 or 2000. When the panic takes place, all assets sell off, including gold.
Yeah.
It sells off because the decision isn't made by you and I, it isn't made by an investor, it's made by a margin clerk. People on margin get sold off. The policy response to a financial crisis has usually been fiscal easing, which is good for gold. So one would expect over 2 months or 3 months or 4 months, the gold price to recover. The other part of the equation is, of course, gold stocks. And gold stocks are stocks. When stocks sell off, the gold stocks sell off too. And marginal assets, tertiary assets, like junior gold stocks, sell off very, very, very hard. If you are a professional investor, a professional speculator, if you are somebody who invests on a value basis over the 2 or 3 year term, what a huge sell-off is actually called is a sale. And sales are very good. If you are a speculator, if you are in the markets based on emotion or narrative, you should be out of this market.
Wow. So just to follow up on your gold stocks question, so gold price has been trading relatively well since last year, middle last year, and of course still volatile, but the gold stocks seems to be the twofold. The gold producers doing well, benefited from the rising gold price, but the juniors, the developers, not so much. Does really the investor actually lost all the confidence in the juniors? What's your thoughts on that?
Well, I think if you look back a decade, to the decade between 2000 and 2010, the performance of the gold mining as an industry was so poor that investors did lose confidence in the industry. People buy gold and gold stocks for different reasons. Many people who buy gold buy it as insurance. And people buy gold stocks because they think the companies will do better. The performance of the gold mining industry in the last decade was so poor that I think it'll take time for people to recover their faith in the industry. And the truth is that the junior gold mining industry, as an industry, is overpopulated. There are probably 2,000 listings worldwide, and there's probably 200 that are viable. If you pick and choose among the 2,000, you can make a stupendous amount of money. But if you are not discriminatory, if you're buying the market as a whole, the junior gold market as a whole, without taking the time to segregate, you will lose money. And I think that's being reflected in the market.
Okay. Yeah, let's talk about the next subspace of the market, royalty and streaming business. Do you like that business? Do you think the investor, with the lower risk tolerance, the approach to consider that in this kind of rising market?
That's a wonderful question. So the direct answer is yes, I like the royalty and streaming companies. Yeah. They're not all created equal, of course. The truth is, in my experience, in a gold equities bull market, the upside in the market as a whole is so great that you don't need to outperform the market. Ironically, the most efficient companies in the gold business will do the least well through a gold bull market because they won't have the marginal returns. Yeah. But the truth is that one should probably, for most of one's money, buy the best companies, even though they will underperform the index as a whole, because you de-risk so much. So Franco-Nevada is an expensive stock, as an example. Yeah. But I try and populate every gold portfolio I have with Franco-Nevada because the margins are so high. The management expense ratio is so low. The surprises that are built in with big deposits are always good, never bad surprises. And I like good surprises.
Yeah.
So despite the fact that the big royalty and streaming companies are expensive by many metrics, they're expensive because they're worth it. What you will see now is because of the success of royalty and streaming companies, you'll see 20 or 30 of them formed.
Yeah.
Johnny-come-latelys. And mostly you'll lose money on those, because they won't be able to compete with the established guys. Anything that is popular, that is successful, gets overcapitalized in capital markets. And so one would be well advised as a speculator not to buy the Johnny-come-lately stories, but rather to go with established companies with proven track records, with good management teams, and importantly, with a low cost of capital.
That's a really good answer. And let's talk about the M&A in the industry. Do you expect we see a lot more or equally more in the M&A space in the mining companies?
Yes. The truth is that the biggest problem that we have as an industry is excessive general and administrative expense relative to assets under management, relative to total expenditures. And the best way to get the general and administrative expense to go down is to combine companies, have more assets under fewer management teams. Larger companies trade at better multiples. They have a lower cost of capital, and this is a capital-intensive business. Also, among bigger companies, single asset companies trade for lower multiples than multiple asset companies. So when a multi-asset company takes over a single asset company, that discount goes away. This is very, very virtuous. It must happen, and it will happen. There won't be as much of it as I would like to see, because of course the person who gets acquired loses his or her job, and they don't like that. But the truth is that this needs to happen, and this will happen.
So this last question coming from some of the audience, they're interested about uranium, because you have a strong take on that space. So what's your thought? Why is it still trading relatively low for a number of years? What do you think it will happen in the near future, or if that anything good will happen in the space?
Unfortunately, I have to give the same answer that I gave you the last time you asked the question, which is to say that the uranium price will rise as the pace of Japanese nuclear restarts occurs. And unfortunately for the uranium business, the price of liquefied natural gas is so low that the avoided cost that the Japanese face is low. Total uranium demand worldwide is now in excess of pre-Fukushima levels, principally as a consequence of Chinese new builds. But the supply on the market is largely Japanese inventories. The Japanese inventory gets changed from held for resale to fuel as the pace of Japanese reactor restarts increases. Now, while I can't give you a time, I can tell you for certain that the price of uranium will go higher. Here's why. The International Energy Agency says that the total cost to produce a pound of uranium, this is including cost of capital, prior year write-downs, all that, between $50 and $60 a pound. So you make the stuff for, let's say, 50, you sell it for 25. You lose $25 a pound, and you do it 100 million times a year. It gets pretty boring. Either the price of uranium goes up or the lights go out. Those are the only two choices. So your investors and speculators that have patience, let's say they live in the United States. Uranium is 15% of baseload nuclear power supply in the United States. If the price hasn't gone up, 6 years from now, the lights go out. That's your choice. And you need to decide which is more likely to happen.
Thank you. Thank you for your insight today, Rick, and thank you for spending time with us during the business schedule in the PDAC. Thank you, Rick.
Thank you for giving me the opportunity to address your audience.
Thank you.